Today, folks, we're diving down into the inflation. The CPI data came out. I find it very intriguing because most of it was relatively anticipated. They thought it was going to be extraordinarily bad, and it really, in my opinion, wasn't as terrible as I thought it could have been. We're going to take a look at the general markets. I want to talk about Facebook, Google, Shopify, and just take a look at the Google search traffic surrounding those companies right now, because those are largely dictated on what people are spending on advertising rates. If this is a conversation you can appreciate, in return, I simply ask that you hit that like button, folks. But obviously, in a little bit of an early release here, there's a CNBC article saying that the White House says that it expects inflation to be extraordinarily elevated, and it was elevated, but I think this article over-exaggerated it because they posted this yesterday and the CPI data was released this morning. And let's just take a look at this from March of 2022, guys, because this is your general living expenses. This is what we all know is hitting every single person at home. And just taking a look, guys, food is up 1% for the month of March. We got food at home 1.5, energy and fuels, natural gas, anything related to the utility sector, I figured would be seeing the most inflation because we're seeing a lot of the utility stocks fly up pretty aggressively here. So clearly there might be some insider trading going on with Nancy Pelosi there. But take a look, because energy and commodities up 11%, the highest basically that it's completely been over the last several months. We've got, let's take a look here, 18% on the energy and economies. Gasoline's up 18.3%. Fuel and oil is 22.3. Energy services 1.8. Electricity 2.2, which isn't as high as January, but obviously that's the winter season, so it's expected to be a little high, but it's still on the upper end of it. And if we just take a look kind of coming down here a little bit more, there are a few other things like used cars and trucks is actually coming down finally. I mean, we all never heard of, cars going up in asset value, considering when I looked at my used Hyundai Accent, I mean, when I went on Kijiji, when I went on Auto Trader, just looking at the general prices, I bought that car for like $7,500 used. And even with the 30,000 kilometers I put on it, I could sell that car anywhere from 10 to 12,000. So we've seen a 30% increase on even the junkiest of used cars, because I'm not driving anything luxurious here. Medical care and services has actually been relatively okay. These are things I'd really pay attention to because they hit really close to home. Shelter 0.5%, nothing too extreme. Transportation services, obviously with fuel prices, that one's also seeing cyclical highs over the last several months. Now, what I want to pay attention to is moving forward, because as much as inflation's bad, as much as interest rates need to go up, we're starting to finally see, I think, the other half of this probably a little bit earlier than I was expecting. I figured on the second half of this year we'd start seeing a cooling period. Now, there's no guarantee these things fully cool off, but I figure the geopolitical war, all of that nightmare has been priced into this market. I think the logistics and supply constraints will start kind of sorting themselves, because that really impacted over the last couple quarters. So basically, taking a look here, guys, I don't think moving forward based off gas, presuming it doesn't spike to these astronomical highs, which again, all the geopolitical stuff is starting to get priced in. If it stays down below here, that means that the inflation rate should start to level off in the coming months and quarters here. But there are a few things of concern. I mean, when it comes to a lot of the high demand metals like copper, we are seeing them pull back as well, but they're still trading at pretty decent highs here. Another big thing to pay attention to is things like wheat, because obviously the food market is a huge deal, highly related to wheat products, and even that has pulled back from its crazy highs, but still a lot higher than any of us would like to see here. Coal, everyone thought coal was dead, and even after its major spike up, which again, with things like Southern Company hitting all-time highs, one of my favorite utilities, highly related to the coal sector, I mean, it's neat to see that it's actually pulling back here. So if we can kind of just stay within a range and stop hitting these cyclical all-time highs, I think we're going to be doing just fine from an inflation rate moving forward. Like even lumber, even though it's been volatile as heck, is starting to pull back a little bit. We're starting to see a cooling in the Canadian real estate market. I think as interest goes higher, we'll continue to see cooling rates across the US market as well. Again, speculating on that, but that all drives to the fact that inflation may have peaked in the coming quarter here. And as I predicted, and as many people predicted, coming into the second half is where things will really start to sort themselves out. Fingers crossed, of course, here, folks, because all of this relates to a lot of things related to ad spend, which is why I want to talk about Google, Facebook, and Shopify here, because these companies, guys, I mean, they're literally, they run small town America. Anybody that needs to run their business, Kevin O'Leary stated this many times, they're all using these services. I use these services. All of my income is coming from Google and YouTube. I use a lot of Facebook products, and I also use Shopify stores. But where I think my bet would be moving forward, and it sucks because I think Shopify is so overvalued here, and I want to see it pull back a little bit more, because honestly, for some Canadian exposure to the tech sector, I wouldn't mind adding Shopify to the portfolio here. But I honestly think Google shying away from guidance, Facebook offering guidance, getting leveled. I think honestly Facebook might bode well best for earnings, because when we take a look at the cyclical people looking at Google ads, Facebook ads, going back to this time last year, guys, coming into the January period here, there was big spikes up coming into March with Google and Facebook slightly, and then they kind of pulled back a little bit. But when we come to this time this year, Google or Facebook's trading around the same kind of search traffic as it was this time last year, but Google is not. So I think Facebook's a little bit more poised to see some stability, maybe in their ad rates, but Google's not. I just don't see Google posting the same kind of revenue that they were, considering that the search traffic is down pretty substantially from the same time last year. So I'm really intrigued to see what these earnings are going to look like. But Shopify, as we can see, compared to this time last year, the search traffic is actually higher than it was. I mean, we're not talking about the March 2020 crash here. Obviously, those times have come and gone. But looking forward, guys, I'm really intrigued to see how all of these three pair against each other. Because if Google search traffic has anything to say about it, which it's not the most accurate indicator toward income and investing, it still does give us a little bit of insight into how people are utilizing these platforms. And it looks like Shopify is leading the way compared to this time last year. So let's take a look at the general markets here, guys. I've been doing some shuffling around. I'm going to talk about that in a video in a little bit, because I've been really fixated on a few companies. I really like the dips I'm seeing in some of the Canadian real estate stocks, things like Home Depot. I mean, I'm looking at the US banks I recently started adding, but we'll get into that in a little bit. But take a look here, guys, because we are seeing a bit of a resurgence after that inflation data did come out, not being as bad as a lot of people would have anticipated. A lot of expected stuff here. So we got Apple, Microsoft trading up, Tesla's doing pretty well here, holding very well. Seeing a bit of a sell-off, mixed feelings between the consumer staples and discretionaries. Telecom, still very intriguing to me, guys. I'm still looking at a bunch of the telecom sector. They're continuing to do well, being one of the best performers this year. Canadian banks, US banks, I'm highly fixated for earnings because interest is going up. The banks are going to become more well capitalized. So I just feel like the banks are still an incredible play, and buying them on the dips, I don't think you're going to do particularly wrong in the next 1 to 3 years. Like I said, when it comes to the real estate sector, guys, we have been seeing a relative pullback. So I'm very intrigued by Canadian Apartment Properties Trust. I still think energy is going to be a huge proponent to the performance this year, with my Algonquin Power, Enbridge, Northland Power here pulling back pretty aggressively. I'm going to have to check into why this one's been pulling back, because I think it was down 5% yesterday. But Enbridge still trading up nicely. Algonquin Power still holding well. I'm surprised BABA. There's some big news with Alibaba here, guys. Basically, Charlie Munger lumped half their position down, so I might make a video specifically on that this week as well. Scrolling down, let's take a look at some of the speculative stuff. Obviously, with some of the growth plays playing up here, ARC's doing pretty well. Let's take a look. So we got a lot of the, let's scroll down. I'm trying to find the speculative investments here. So let's take a look. So we got Ouster is up 4% today, Hyliion up 4%, Virgin Galactic up 5%, Rocket Labs up 5%. So this looks like a relatively good day for the speculative, or basically the non-positive EBITDA based companies. I don't know if I want to say that they're just purely speculative, because some of them I think are incredible buying opportunities. So yeah, it's a relatively continued volatile day in the markets, with nobody knowing whether we're coming or going. But the good news is I really think we're starting to see the final leg up of inflation. Fingers crossed. So hopefully that's going to bode well moving forward for people that are struggling to pay rent, buy food, gasoline. I mean, it's impacted all of us, but I want to pass that question off to you. I'd love to know what you guys think about this in that comment section below. Consider subscribing, because of course we're going to be making a ton of videos on portfolio updates, these stocks that I love. I think there's great opportunities for you dividend investors out there, but stay cool, stay awesome. And as always, I look forward to catching you in the next one.